the ability to identify and exploit price anomalies or averages or ratios has really been at the very forefront of my success. So it's something that I'm keenly aware of and like to share it as often as possible.
Hello, this is Maurice Jackson. Before we begin today's interview, I'd like to remind our listening audience that I'm a licensed broker to sell precious metals through Miles Franklin, where we have unlimited options to expand your precious metals portfolio. Stay tuned to the end of our interview for contact details, and I look forward to the opportunity to speak with you.
Welcome to Proven and Probable, where we deliver mining insights and bullion sales in the form of physical delivery, offshore depositories, and private blockchain distributed ledger technology.
Welcome to Proven and Probable. I'm your host, Maurice Jackson. Joining us for a conversation is Andy Schectman, the president of Miles Franklin Precious Metals Investments. Mr. Schectman, how are you today, sir?
I'm great, Maurice. How are you, my friend?
Doing well. Always a pleasure to have you on the program to discuss the value proposition before us in precious metals. For audience members, today we will identify 3 exciting value propositions for your precious metals portfolio that are currently selling at a deep discount. Before we begin, Mr. Schectman, you have a proven pedigree of success in the precious metal space. I want to discuss a methodology that has made you and the clients of Miles Franklin very handsome returns over the years, and that is your use of ratios. Sir, please explain why it is paramount for precious metals investors to have a thorough understanding on precious metals ratios.
Yeah, because, as we said last time we talked, Rick Rule is fond of saying the world deals in rhetoric and he deals in arithmetic. I like to look at the world the exact same way, Maurice. I like to look at it from the standpoint of arithmetic, and at least in terms of what I do here at Miles Franklin. And ratios are very, very, very important in mathematics. They are another way of saying the law of averages. As we look at ratios that fall out of historical average, they represent opportunities, distinct opportunities. And I guess the easy way of saying that, Maurice, is the further away you get from long-term established averages, the greater the magneticism that pulls you back to the average. In other words, I'm here in Minneapolis, where the high today may be 20, 25 degrees. If I woke up this morning and it was 85 degrees in the middle of the winter, I wouldn't rush to pull out my lawn furniture and assume that spring has come early. It's an aberration. It's an anomaly. And when I look back at what has made me successful over the years, in many respects, the ability to identify and exploit price anomalies or averages or ratios has really been at the very forefront of my success. So it's something that I'm keenly aware of and like to share it as often as possible.
Speaking of opportunities and anomalies, let's discuss value proposition number 1, and that is gold. Andy, please introduce the Dow-Gold ratio.
Sure. Historically, I guess you could say, when the Dow can be bought for 5 ounces of gold, we buy stocks and sell gold. When it takes over 15 ounces to buy the Dow, you sell stocks and buy gold. Bill Bonner, who's a very, very smart man, and has a chart that he's been tracking this for the last 100 years. And had you followed that pattern over the last 100 years, there would have been 6 possible trades that you could have made, and you would have won on every single one of them. So I guess as a rule of thumb, 15 or higher, you sell the Dow, you buy gold. 5 or lower, you do the opposite. I would argue, however, the easy money by the Federal Reserve that has found its way into inflation of asset prices, that these ratios are even more skewed than they should be. They are, I guess you could say, artificially positioned. And so like a rubber band being stretched or a spring being stretched, when it pops, it will pop significantly more because it's been manipulated. Both prices have been manipulated, that of gold and arguably of the Dow. at all-time highs based upon every single metric. So at this point right now, with the ratio much higher than 15 to 1, closer to 19 to 1, the idea would be to sell the Dow and to buy gold, absolutely. And I could make a strong argument that the Dow is strongly overvalued based upon metrics. It still may go higher, but based upon historical metrics, the Dow is overvalued, and based upon historical metrics, you could argue that gold is significantly undervalued, making this a no-brainer trade, actually.
Now that we understand the virtues of knowing the Dow-gold ratio, let's look at another value proposition, and that is silver. Andy, please introduce the gold-silver ratio.
Well, historically, geologically, silver-gold ratio is 15.5 to 1, meaning geologically what comes out of the ground is 15.5 times more abundant than silver is than gold. For the last 100-plus years, Maurice, about 150 years, that ratio has been about 42 to 1 on average. And if you listen to some people in the industry who are at the forefront of it, like Keith Neumeyer, the CEO of First Majestic Silver, he's publicly said that what they see coming out of the ground is closer to 9 to 1, in the respect that silver is found in nature in what is called epithermal, and means that it's very close to the surface. So most of the big deposits of silver have been found long, long ago, and 65% of what is mined nowadays in silver comes from byproduct mining of other metals. And so it's a situation where you could argue that what's coming out of the ground right now is far less than what has historically been expected to come out of the ground. In other words, 9 to 1 might even be more than what we see coming out of the ground. In any case, a ratio right now of 86 to 1 or thereabouts is an anomaly. It's only happened a few times in the last 150 years. The last time we saw it was in 2010. We saw a ratio of 80 to 1. Within 1 year, in 2011, you had gold at nearly 2,000 and silver at 50. That's 40 to 1. The historical average going back literally over 150 years is 42 to 1. So at this point right now at 86 to 1, a strong argument could be made for temporarily. What I mean by temporarily is we sell the gold and buy silver. When the ratio normalizes, you trade back into gold and you double the amount of gold you started with without spending a penny. And here again, a ratio of 86 to 1 is like waking up in Minneapolis in January to find 85-degree weather. Just doesn't happen, and if it does, it's an anomaly. Same thing here.
Certainly is. Let's discuss value proposition number 3, and it's probably my favorite, and that is platinum. Andy, please introduce the gold-platinum ratio.
Yeah, same thing here, Maurice. When I think of platinum's more rare than gold. I don't know exactly how many times more rare, but it's significantly more rare than gold. And when forever platinum is traded at a higher price than gold. In fact, I can remember, I think it was around 2008, with gold around 800 and platinum north of 2,000, it was 3 times the price of gold. But the first 20 plus years of my career, 25 years, going back 50 years back of that, platinum always traded at a premium to gold. Sometimes $100, sometimes double, sometimes triple, but always a premium. The fact that it's trading at a discount to gold right now is another anomaly, just as the platinum to palladium ratio is an anomaly. And I think at this point, the argument would be to sell gold and buy platinum, obviously, because it is so far out of whack. And, there are reasons. I guess you could say a lot of it has to do with Dieselgate, the fact that catalytic converters are typically for unleaded catalytic converters are made of palladium, and for diesel that of platinum. With the push to get diesel fuel vehicles off the road due to emissions, platinum has suffered. That is the easy answer. I don't know if it's deeper than that or not, but simply to say the ratio is way out of whack. And in the 30 years I've done this, 28 and a half or 29 of those 30 years, it would have cost you more money to buy gold than it would, or platinum rather, than it would to buy gold. And so the fact that we have that ratio upside down right now is a 1.6 ratio is just, again, it's an anomaly, Maurice. It's 85 degrees in the middle of January in Minneapolis. These are true value propositions, true anomalies when referenced with historical averages.
Now, Andy, we didn't reference palladium or rhodium, and that was, again, because of the ratios. Is that correct?
That's exactly correct. Yes, absolutely.
Now, if somebody wants to take advantage of the buying opportunities in gold, silver, and platinum, what's the process?
Sure. It's as simple as giving either Miles Franklin a call, giving Maurice a call, myself a call. Any of us here at Miles Franklin are happy to assist, and we start by answering questions. We prefer to do things the old-fashioned way with the threat of identity theft and cyber threats. We have decided to really take this offline, do things the old-fashioned way, answer questions, and give personal service to any of our clients, starting with answering questions first. If we do a good job at answering your questions, then hopefully we get to the point of transacting business. As far as placing an order is concerned, it couldn't be easier. We decide what you want. We lock in the order on a verbal handshake. An invoice is then emailed to the client, overnighted if they preferred by Federal Express. Once the invoice is paid for by wire or check, everything is sent by UPS insured overnight, or 3-day if it's silver, typically for free. It's pretty much that simple, Maurice.
And that is registered mail, is that correct?
Yes, sir. That is correct. Or UPS insured, either one.
Mr. Schectman, for someone listening that wants to get more information regarding Miles Franklin, please share the contact details.
The website is milesfranklin.com, where they can sign up for our free daily newsletter. I can be reached at andy@milesfranklin.com, and my 800 number is 1-800-255-1129. Our main 800 number is 1-800-822-8080. Look, Maurice, we live in a homogenous world, and it seems that price defines so many people and so many things. We like to define ourselves, I like to define myself, by accessibility and accountability. And you realize how important that is when you need someone. And I like to be there for my clients, and that's why all of my clients have my cell phone number, and we're very, very easy to reach, all of us here at Miles Franklin. And so give us a try. I think you won't be disappointed.
And that is 7 days a week. I don't know the last time I was able to contact my banker on a Sunday or Saturday.
Yeah, and that's true. And if you're a client to Miles Franklin, you know that to be true. Any of us can be reached, any of the brokers here can be reached on the weekend by simply pressing, I think it's the number 2 on our phone system. When you get a voicemail, it goes right to their cell phone. So, look, I've always prided myself on accessibility, and I think that's very important. And we're providing a service, and I think where this world is heading, relationships and accessibility will mean more and more and more, and that's something we're really good at right from the get-go.
And as a reminder, I'm a proud licensed representative for Miles Franklin Precious Metals Investments, where we provide a number of options to expand your precious metals portfolio, from physical delivery, offshore depositories, precious metal IRAs, and private blockchain distributed ledger technology. Call me directly at 855-505-1900, or you may email maurice@milesfranklin.com. Finally, we invite you to subscribe to provenandprobable.com, where we provide mining insights and bullion sales. Mr. Schectman, thank you for joining us today on Proven and Probable.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.